just thought I'd run through some of our thoughts with reporting season so far. We're just about a third of the way through, and I guess overall the results give us some comfort that that the earnings picture is actually holding up quite well. Acknowledge it's still early days, given we're only a third of the way through. And those who've seen a few reporting seasons will know that result quality tends to deteriorate as we get through to the last couple of weeks. But nonetheless, it's been pretty solid so far, and that better than feared theme continues to play out, as we probably see with the results this morning from the likes of A2 Milk and Reliance. I guess the most notable pattern really reinforces our view that small caps really is the best risk-reward trade. It's certainly the most compelling this year, we think. So far, the ASX 50 small caps are beating at an extremely high rate, one that we haven't seen for a very long time. So 44% are beating expectations, while misses are probably on average there or thereabouts. And beats, I guess, what gives us also comfort is they are across the board. So if you look across cyclicals, such as retail, industrials, but they're also happening in tech as well. So across the growth cyclical spectrum, it's all happening, which is encouraging. We're keeping an eye on 13 small caps that analysts have flagged in the playbook as being beat candidates. So they'll be reporting over the next couple of weeks. So do keep an eye out on that. In terms of the large caps, beat and miss levels are sitting at around sort of average. Where we're seeing the beats are the high quality, high PE names. So if you think of the likes of Wesfarmers, Goodman Group, Cochlear, and as well as, I guess, ResMed, dispelling some of those concerns, I guess, around the GLP-1s. While misses, perhaps in some of the more surprising names in James Hardie and Macquarie, but we note they were only down marginally as well. So on the other point is on the earnings front. I guess it's important to look at that picture and just how well sort of FY24 earnings and FY25 earnings is holding up. And I think it really speaks to, just given we're seeing pretty flat earnings revisions to FY24, when we were going into this reporting season, perhaps fearing, a spate of downgrades. I think that speaks to perhaps the ability for corporate Australia in a slowing revenue environment to really manage their margins by either cutting costs or managing their efficiencies. So I think that really points to a really strong picture for earnings into 2024. Also, FY25 earnings have been revised up marginally 0.5%. So in total, 77% of companies so far are either reporting sort of flat earnings changes to FY24 and FY25, or they've seen revisions positively. So I guess that's a really good stat, just showing you that earnings resilience. As to our team scorecard so far, really a plug for the playbook and the analyst calls there. On the whole, the flag positives are up quite strongly. Where it does sort of stand out a little bit are the flag negatives actually moving in the other direction, but perhaps it is a reflection of, investors willing to take those riskier type of trades, those lower quality trades, and the better than feared results probably also permeating in that section as well. So that's something to watch out for, but, certainly the flag positives is really good endorsement of the analyst calls in the playbook. Now, quickly, some of the other themes worth pointing out. We're seeing material reactions to beats, and it's quite remarkable what we're seeing in terms of the difference between beats and misses. So in total, we're seeing about a 12.3 price reaction to beats. Now, obviously, there's a few outliers there that's dragging up that average, but even if we were to take the median, that's still looking at about 8% price reaction. So well above what we're seeing in terms of FY24 and FY25 earnings revisions. So what the market is saying there is they are prepared to re-rate the stock, and I guess that really points to sentiment really turning around perhaps in the market. And likewise, if you look down the miss side, we're not seeing these big negative reactions either. the negative reactions are more or less in line with the downward revisions to FY24-25. So big response to beats, but then just more muted response or in line with the negative revisions to earnings for FY24 and 25. In terms of performance, it is really being led by the mid caps so far. We're seeing big revisions there to mid in that mid cap space. So if you think of the likes of Boral, Seven Group, JB Hi-Fi, Downer, to name a few, and also some of the energy retailers, AGL and Origin as well, we're seeing some big responses there, both on the earnings front as well as that price reactions, but also not far behind, I guess, it's small caps are seeing a pretty good response this reporting season. So again, just reinforcing our view that that's probably the segment of the market we need to be looking at. So we certainly think the tide is turning for the small caps. And if you look at, I guess, the relative valuations for small caps, particularly the small cyclicals with the chart on your right, you're seeing far superior earnings growth, you're seeing positive EPS revisions, and you're seeing, PEs and valuations more or less in line with, long-term averages or slightly below long-term averages. I think the risk-reward trade is really looking around that area, particularly if you're not seeing those negative earnings revisions that the market has been fearing. So going into that, just exploring that theme a little bit more, we've highlighted here the 13 small caps that are due to report over the next couple of weeks, which have been flagged in the playbook. So a number of sort of good quality names there as well, a lot of cyclical names that we think could do really well. So the likes of Baby Bunting, Acro, IPH, Qualitas, Reject Shop, Veeam, Avita Medical, Monash, DGL, ImpediMed, James Lin Group, Polynovo, and Tyro, all appointed by, or highlighted in the playbook as being surprise candidates. So urge you to have a look at that. I'll leave it there.